Well, we'll get back to the story around mining and how it affects Africa, looking at the various companies involved. But at this time, let's quickly talk about Nigeria's capital markets that has actually lost 267 billion naira in 5 months. Now, according to what we know, in 5 months of May 2024, foreign portfolio investors in Nigeria's equities took away 267.47 billion naira from the market, as against 190.82 billion naira they inflowed. The outflow in 5 months to May represents a significant increase when compared to same period in year 2023, when these FPIs, who brought in 49.30 billion naira into stock market, outflowed 50.04 billion naira. Does this portend a burgeoning market or one gradually sliding into distress? Vincent Oshoma, Securities Dealer, Midpoint Capital Limited, joins me this morning to unpack this. Mr. Vincent, thank you so much for joining us.
Thanks for having me. Good morning.
So foreign investors have been steadily selling their stocks in the Nigerian stock market for some months now. And when that happens, there's less overall capital in the market. So is it a worrying trend, or there are specific reasons for the withdrawal?
Yeah, I don't think it's a worrying trend, because if you look at the trend from year to date, you understand that there has been an improvement from around March. If you compare the figures for March, you have had more inflows than outflows. But when you look at January to February, those are some of the reasons why you see the deficit in terms of the inflows and the outflow. But when you look at specific figures for March and April, and also for May, you are seeing an improvement, because for a long time the foreign investors have been on the sideline in respect to our market. So the local investors have been dominating the market. From around the time where we saw the CBN increase rates and also achieve some level of stability in the forex market, we have seen them coming into the Nigerian market. First of all, they came into the fixed income market, and they have also been entering the equities market. And as we see investors coming in with respect to the stability in the market, so you expect some outflow for those that have been in the market looking for opportunities to exit the market. So that's why we can see there has been some outflow. But month by month, you can see there have been a lot of improvement with respect to foreign investors coming to our market.
Well, some analysts are actually blaming this trend on harsh government policies, maybe socioeconomic instability, also throwing inflation into the mix, foreign exchange issues, and even shifts in global investment patterns, such as a preference for developed markets. So this would mean policy decisions of this current regime are maybe the major culprits responsible for the negative trends. Do you align with that thought?
Yes, to an extent, I align with it, especially when you look at the fact that we have seen some of the investors exiting some major companies, like we saw Guinness, and also some companies exiting Nigeria because of some government policies. But when you look at it, the FPIs are more in for the short term. And I think the major factor for the FPIs when it comes to their investment have to do with the stability, forex stability. And you and I know that there have been some issues with respect to forex, not until recently that we have seen some level of stability around the 1,004 to 1,005 levels. I think that's something that I've seen improve, make them increase their inflow into Nigeria, seeing them coming into Nigeria. Or in terms of the general environment, especially for FDIs, it has been challenging. But FDI is a major factor. The driving force is forex and also the inflation. But when you saw the CBN increase rates, a lot of them come into the market, especially for the fixed income space. But also we are seeing them also trickling into the equity space.
Let's look a bit at the numbers. Now, the same period last year, these FPIs brought in about 49.30 billion naira, of course, into the Nigerian stock market and gained 50.04 billion naira. This year, it is about 190.82 billion naira that was brought in, and about 267.47 billion naira was taken out. So we see the growth difference there. But does it appear to you more as a lucrative market based on increased investment, or maybe a market edging towards distress and desperate pullouts?
Yeah, I don't want to see it as a market edging towards distress, because if you look at the current situation, like I said, the major factor for them is the forex market. And we look at how far we have come with respect to the forex market. There have been some level of stability. around the 1,004, 1,005 levels. I think that's some level of encouragement for them. And also, when you look at the market, there's a lot of opportunities in our market. And I think the major factor has been, like I said, the forex and also the inflation.
So how do you think that the markets will be
and
impacted?
Like the CBN mentioned, we expect
okay, so I just wanted to confirm, looking at the numbers of the performance, how you think that the market will be impacted probably in the next couple of weeks or months?
In terms of the impact of the market on the market, I think currently the major drivers, the major issues that are impacting our market has to do with inflation currently at quite a high levels, and also looking at the challenges in the economy. But I think as it's expected that inflation is expected to taper down before, as we approach the end of the year, we expect that the market will be better off for it. And also with respect to inflation, also looking at the banking recapitalization is another factor that has also affected the market, because people are looking at the fact that these banks are going to be raising more shares and there will be a dilution in terms of their earnings. I think those are some of the factors people are looking at. And the banking sector controls a major part of our market. I think that has been a major impact in our market. So outside those factors, I think there's still a lot of opportunities in the market for people that are looking at long term. And once this recapitalization is done, I think it will result in having very strong banks. And once you see inflation coming down, and also rates is another factor that affected the equities market, the high rate environment in fixed income space. And we have seen some level of reduction in rates coming down, especially looking at the FGN savings bonds. Looking at for this month, we have seen it come down by about 100 basis points for both the 2-year and the 2 years bond. I think that's a signal that we're currently seeing a reduction in rates, and CBN also trying to moderate rate, because it definitely, we can't have a growth in the economy when we have a high rate environment. But we understand the reasons for the increase in rate. And once that we have achieved some relative stuff, reducing the rate and doing other things to take care of inflation.
So, of course, just as you have spoken, some financial analysts also think that it is not necessarily all negative for the market, as the data suggests a continued dominance of domestic investors. That's about 79.63% when you look at how they have actually possessed that particular aspect. Now, of course, when you look at the dominance of the domestic investors in terms of the percentage, would you say that the signs are looking as though the market is maturing?
Yes, that is a good thing for the market, because when you look at the domestic investor, and that's one of the reasons why we have experienced some level of stability in the market. If you look at last year, the market did over 45%, and that was mainly driven by the activities of domestic investors, the institutional and the retail investors. The foreign investors are largely out of the market, because they were like, if you look at the average, about 20% or less percentage for last year. And now we are talking about them going above 30%. And because they see that the market is good, but the domestic investors are continuing to sustain the market, which is a good thing, because like we all know, the foreign investors, FPI, they don't stay in the market for too long. So we need more of the domestic investors to sustain the market, which is a good thing for the market. And like you said, a sign of development for our market. We hope that we're going to see more participation by the domestic investors. But we need the foreign investors to drive liquidity and in the market.
Okay, let's just track back a bit and look at it for over 16 years now, looking at it, bringing it back to 2004. We see that domestic transaction decreased by 10.94% from 3.556 trillion naira in 2007 anyway, to 3.167 trillion naira in 2023, while the foreign transactions also decreased by 33.28% from 616 billion naira to 411 billion naira over the same period. So what does that tell you if you are to look at the longevity on the number of years in terms of attractive investment opportunities, investors' behavior and Nigeria's market appeal? Do you think in the next 16 years there's the possibility of a change and a growth in the trajectory?
Yes, I want to be optimistic in terms of growth in the market, because when you look at those figures, you have to now look at the numbers deep down. You understand what happened in the market. We had the height of the market around 2008. And then when the global economic meltdown that affected the market, we saw the market coming down. And not until recently, before we went back to the all-time high of about something thousand, for 6,000 for the all-share index. And currently, when you look at the market, we are currently at about above 100,000. That tells you the market has come back from the levels that it was at 2008. And when you look at the projection from the market in terms of government policies and expectations, I think the lot of opportunities, a lot of growth expected ahead, despite the challenges. But I think that a lot of growth expected in the market. So what has happened recently, when you look at the figures and you look at it deep down, you look at there have been some improvement in terms of how far we've come. Remember, this market we are currently at 100,000 in terms of all-share index. From 68,000, went as low as 30-something and 40-something,000. So for it to be at over 100,000, it shows that we have achieved some level of growth and increase in the market.
Okay, let me also get your thoughts on this, of course, Mr. Vincent Oshoma. Now, domestic retail investors traded stocks worth 885.19 billion naira in the review period that we've been talking about, while domestic institutional investors accounted for deals worth 906.07 billion naira. So traditionally, retail investors might be expected to be the dominant force within domestic participation. However, in this case, domestic institutional investors slightly surpassed retail investor activity, and that is according to the reports that we have. So what is your take on this, looking at the numbers and, of course, the differentials?
Yes, you know, in the market, like when you look at it from the period of 2000, we saw a lot of retail investors and some of the current participators in the market in terms of the pension funds and also a lot of the asset management. They were not, in terms of their participation in the market was quite reduced then. So we have seen increased participation in the market as a result of capital formation, which is good. And like I said, it brings stability to the market. But for the retail investors, after the market slump in 2008, we have seen there have been a lot of efforts to bring them back to the market, but not much have been achieved. But there have been some level of success. So we're going to see them increase in the market, because when you look at the current levels of participation compared to some years, a few years ago, is better off now. And I expect that the current recapitalization in the banking sector will also pull a lot of retail investors into the market, like we saw pre-2008, especially the previous recapitalization exercise. A lot of retail investors came to the market as a result of that recapitalization. So I expect that this current recapitalization will also drag a lot of retail investors into the market. But the senior investors will continue to play a major role because of the level of participation in the market, and we actually need them to achieve some level of stability in the market, because they are more into the market for the long run than the retail investors that come and go.
Okay, looking rough for now, but then there's the potential for it to look good for the market, and we hope that will happen. Vincent Oshoma, Securities Dealer, Midpoint Capital Limited, thank you so much for your time.
Thanks for having me.